Welcome to Tikona Capital FinServe's Market Outlook for August 2024. I'm excited to share our comprehensive analysis of the recent market correction, the emerging signs of recovery, and the strategic opportunities we see ahead. At Tikona Capital FinServe Private Limited, your investing co-pilot, we provide comprehensive wealth solutions for working professionals, HNI clients, and family offices. Our philosophy centers on creating finite solutions in an environment of infinite financial possibilities. Important disclosure: investments in securities are subject to market risks. Please read all documents carefully before investing. This presentation should not be considered as investment advice. Please consult your financial advisor before making investment decisions. Past performance does not guarantee future results. For information and detailed disclosures, visit our website at tikonacapital.com. Let's begin our analysis by looking at how the markets have performed recently and what key trends are shaping the current environment. In July, Indian markets demonstrated notable resilience. Despite global volatility, key indices managed to hold their ground, setting a cautiously optimistic tone as we move into the second half of the year. Sectoral performance revealed clear leaders. Public sector enterprises, auto, and realty sector secured the highest gains on a year-to-date basis, reflecting investor confidence in government initiatives, a strong consumption story, and a booming real estate cycle. On the global stage, Indian indices stood out by outperforming many of their international peers amidst widespread volatility. This relative strength underscores India's improving macroeconomic stability and its perception as a growth oasis. A significant trend has emerged in capital flows. Foreign institutional investor inflows have rebounded and have actually outpaced domestic mutual fund flows over the last 2 months, indicating returning global confidence in Indian equities. The primary market remains vibrant. The BSE IPO index has delivered an impressive 31% year-to-date return, highlighting strong investor appetite for new issuances and the successful listing of several companies. Commodity markets provided a positive signal. Brent crude oil prices trend downwards, with a sharp decline from their mid-July highs. This easing of crude prices is a net positive for oil importing economies like India, helping to curb inflationary pressures. A global trend of disinflation is underway. Inflation rates are cooling across major economies. However, it remains a key metric on every central banker's watchlist due to potential risks from geopolitical and supply-side shocks. The US Federal Reserve has held interest rates steady in the range of 5.25% to 5.50%. Market participants are now closely watching for signals on the timing of potential future rate cuts as inflation data moderates. US Treasury yields have fallen recently, driven by weaker-than-expected economic data. This decline in global risk-free rates has positive implications for equity valuations worldwide, including in India. The narrowing yield differential between India and the US is a crucial development. It effectively makes the cost of capital cheaper for India relative to the rest of the world, which can stimulate investment and economic growth. The Indian Volatility Index, or VIX, has experienced recent spikes, primarily fueled by ongoing geopolitical tensions. This serves as a reminder of the near-term uncertainty that markets are navigating. Against this backdrop, let's now turn our focus to the substantial opportunities that lie ahead for India. We are in the era of Amrit Kal for India, a period defined by the powerful confluence of a young demographic profile, rapid digital adoption, and a deeply enterprising spirit. This sets the stage for sustained long-term growth. Indian individual wealth is on a strong upward trajectory. Both average and median wealth have shown consistent growth from 2008 to 2023. This rising wealth is a key driver for future consumption and investment. The wealth creation story is expected to accelerate. Projections indicate a steady and significant increase in the number of US dollar millionaires in India between 2023 and 2028, reflecting the deepening of capital markets and entrepreneurial success. History shows that manufacturing is the critical bridge for an economy to escape the middle-income trap. While resource-rich nations like Brazil or Malaysia have seen growth stall, those that embraced manufacturing, like South Korea, achieved high-income status. India is now decisively latching onto this proven path for sustainable, high-quality growth. The Make in India push is yielding tangible results. India's merchandise export market share is projected to nearly double from 1.8% in 2022 to 3.5% by 2031, led by impressive growth in engineering goods and electronics exports. India's most significant advantage is its demographics. Our enduring working age population is set to create a virtuous cycle of production, savings, and consumption, fueling economic expansion for years to come. India is comprehensively addressing its legacy infrastructure and regulatory bottlenecks. This strategic improvement is positioning the country as a credible and attractive alternative in global supply chains, a key beneficiary of the China Plus One strategy. A fundamentally strong indicator, corporate profits as a percentage of India's GDP have surged to a 15-year high in 2024. This provides a solid underlying support for the equity markets. Corporate India is in a robust financial position. We are witnessing a healthy trend of rising profits coupled with declining debt levels, which enhances the capacity for future investments and withstands economic cycles. From a valuation standpoint, the Nifty 50 is trading within its long-term average range. This suggests that, despite the strong performance, the market is not in a broad-based bubble and valuations are supported by earnings growth. The government's unwavering focus on capital expenditure, combined with high capacity utilization and rising business optimism, creates a conducive environment for a revival in private investment, marking the beginning of a new capex cycle. A notable societal shift is underway: the rise of premiumization. As incomes grow, we are witnessing a transition from a traditional savings economy to a spending economy, with consumers increasingly opting for high-quality, branded products and experiences. After a period of slowdown, global trade volumes are projected to rebound in 2024. This improvement in external demand should provide a fillip to export-oriented sectors within the Indian economy. We have identified 6 powerful, structural themes that we believe will drive wealth creation over the coming decades. These are: globalization through manufacturing in China Jor 1, rising consumerism, the formalization of the economy, the clean energy transition, the financialization of savings, and the ongoing technology boom. These themes represent massive, long-term opportunities. Within this favorable backdrop, a selective approach is key. Sectors like pharma, specialty chemicals, and it currently offer a more attractive risk-reward balance, in our view, based on valuations and growth prospects. In summary, despite negative sentiments around factors like capital gains taxes, Indian markets have shown resilience. While near-term consolidation is possible due to geopolitical tensions and global data, the medium to long-term India growth story remains firmly intact, targeting to become the third largest economy by 2050. Earnings growth is expected to stay healthy in the 1-15% range. With select sectors seeing high valuations, a focused, bottom-up stock-picking strategy is crucial. Falling global inflation and eventual rate cuts in 2024 are likely to create opportunities. Key risks to watch are geopolitical issues impacting crude prices and volatile food inflation. Our long-term optimism is captured in the theme, Nifty to 50, reflecting our belief in the Indian equity market's immense potential. Achieving this journey requires prudent risk mitigation, including diversification, a focus on quality businesses, and a long-term horizon, which is crucial for sustained wealth creation. At Tikona Capital Finserve Private Limited, we believe in creating finite solutions in infinite possibilities. Our triangle logo represents filtering out unknowable edges from the ultimate circle of market uncertainty. Founded and led by Sumit Poddar, our team is committed to empowering customers to invest in high-quality businesses and build long-term wealth. Connect with us at tikonacapital.com, follow us on LinkedIn, YouTube, and Twitter. Thank you for watching, and remember, invest with conviction, build long-term wealth.